watch out, things are about to get really crazy. The US Treasury Department refers to Bitcoin as digital gold in their quarterly report, which on one hand sets off a Bitcoin price bomb because connecting it to the gold market could push Bitcoin up to $800,000. But that's just one side of it. On the other hand, it warns about the risks of Bitcoin. It warns about a Bitcoin software error or a bug, however you want to put it. It warns about decentralized blockchains, preferring centralized solutions instead. Here we talk about tokenization and why Bitcoin has disadvantages compared to a centralized blockchain. So we now have the full spectrum. On one hand, it's acknowledged that Bitcoin is an incredibly good asset. On the other hand, there's a massive attack against Bitcoin. They're even warning about risks, like, for example, that the blockchain might not work. There are risks here, possible exploits, and also attacks are possible here against the Bitcoin network because it is not secure. It says here that the decentralized nature and the lack of checks in public blockchains increase the risk of bugs, exploits, and attacks, as shown by historical cases of vulnerabilities being exploited in Bitcoin and Ethereum. So, it's claimed that there are historical examples where Bitcoin has clearly failed. Right at the beginning of the Bitcoin network, there were a few small bugs or something like that back in 2012 or so. The Bitcoin blockchain went offline for a few minutes, but they fixed it, and since then, Bitcoin has had 100% uptime. So these are definitely false statements. I can't say much about Ethereum, but it's possible that there have been a few bugs or something like that from time to time. They're really going after Bitcoin again. This is all happening from the US Department of the Treasury. But the weird thing is that, on the other hand, Bitcoin is also recognized as digital gold. Now we're going to take a look at this report, the positive aspects, but also the negative sides of it, because it definitely packs a punch. In any case, you can see that Bitcoin has now reached the highest ministries in the USA. It is debated, and one has to give an opinion on it. The community is really putting a lot of pressure on the legislation, on all the politicians, and on the whole government thing so that these state bodies have to form an opinion about Bitcoin. Whether that opinion is good, justified, or bad is up for discussion, but they are definitely making some big statements about Bitcoin. And as I mentioned, we have this price bomb that got leaked, suggesting that Bitcoin could really shoot up in US dollars, meaning they expect Bitcoin to have massive price potential. But on the other hand, they want to talk people out of it because they might say, okay, hey, we need to sell our bonds, since this whole thing is published by the US Treasury Department, and it's also about Treasury bills. So how can they sell bonds to people? Just a quick reminder, US government bonds are becoming less attractive internationally, and now they want to make them more appealing again with tokenization and stuff like that. At the same time, they definitely have to downplay alternative assets like Bitcoin. First, let's take a look at the very positive coverage in this report. Here it says that there are trends in the growth and use of digital assets, with rapid growth from a very low level. So they definitely say that in 2021, there's potential not just for Bitcoin, but for digital assets in general. They say that digital assets have seen rapid growth, even though they're starting from a small base. The growth came from both native cryptocurrencies like Bitcoin and Ethereum, as well as from stablecoins. So there's a strong focus on stablecoins here, and later on, they'll talk about the advantages of stablecoins because stablecoins also create demand for US government bonds. This is often seen as the Trojan horse, like Tether and so on, creating massive demand for US government bonds because Tether is the largest issuer of stablecoins, and every Tether coin has to be backed by government bonds. Not by a whole bond, but by portions of bonds. So the US government definitely has an incentive to heavily invest in government bonds and to tokenize the whole thing. I see the whole thing very critically, but we'll get into that later. It actually says here that the primary use case for Bitcoin seems to be as a store of value, in parentheses, digital gold, in a decentralized financial world, DeFi. Speculative interest seems to have played a prominent role in the growth of digital tokens so far. So we basically have the nightly accolade here, similar to how Jerome Powell at the Federal Reserve stood up and said, no, Bitcoin can't be compared to the dollar. Rather, Bitcoin is equivalent to gold. This means that it is recognized that Bitcoin is ultimately money because gold has been used as money for centuries. The downside is it doesn't state Bitcoin is money. It notes speculation, and store of value is a step forward. They don't just call Bitcoin criminal. They highlight advantages despite critical points. But at least this is a, let's say, maybe not a full nightly accolade like Jerome Powell put it a bit more succinctly. It's at least a small step in that direction, but it's still positive to see that they're not just saying, okay, Bitcoin is only for criminals. Bitcoin is really bad. They're also highlighting the advantages, even though we'll have to look at some critical points later. And then there's a really, really important sentence here, and this is crucial because, just a reminder, this whole thing is a report from the US Treasury Department, and what they want to do is sell their government bonds. Now listen to this. The market capitalization of digital assets remains low compared to other financial and real assets. So when they say other real assets, that already implies that Bitcoin isn't considered an asset. I'm putting a couple of question marks behind that. And now, pay attention, the growth doesn't seem to have displaced the demand for government bonds so far. And they do have a point there. Of course, the bond market is way bigger. I think it's 200 trillion or something in the global bond market. I'm not entirely sure. The US bond market is probably about half of that or so. I'm not exactly sure about the numbers, but for sure, the US Treasury bond market is massive. And of course, there isn't as much demand for Bitcoin as there is for US Treasury bonds. US Treasury bonds have been considered the risk-free asset for decades. Well, not centuries, but definitely for a long time. It was always seen as the ultimate asset where you could say, okay, here you have a risk-free return. It's a no-brainer to invest in US Treasury bonds. But recently, people are starting to realize, hey, this is a massive scam because in real terms, I'm actually getting negative interest rates. So I have 2% interest, 3% interest, and real inflation of 5-6%, which means I'm effectively losing 3% each year. I'm losing purchasing power. More and more people are starting to understand. At the same time, people are losing trust in the US dollar in the US and are partly moving away from government bonds. A pretty funny fun fact. El Salvador's government bonds are currently skyrocketing. The demand is higher than in any other emerging market in the world. El Salvador has positioned itself so well internationally through its Bitcoin strategy that it's climbing up in the credit rankings. And now their government bonds are being bought up massively. Of course, it can't be compared to a US Treasury bond, but there's growing demand for it. And what's really interesting here is that Bitcoin is being compared to US Treasury bonds. Here, people secretly know that if US Treasury bonds keep tanking, at some point, Bitcoin might actually take their place because Bitcoin offers advantages that many government bonds, especially US Treasury bonds, simply don't have. And more people will also realize that this is not a risk-free deal, that you are essentially buying government bonds from the USA. More and more people are realizing that Bitcoin is actually the risk-free part here, assuming that the US can't go bankrupt. They think that the US has the biggest war machine, and that's how. They make this circular argument that says, okay, US Treasury bonds are safe, but given the current political and geopolitical situation, I wouldn't support that anymore because the dollar is crumbling. Is it going to be 10 years, 20 years? Some people say 2 or 3 years, but the fact that the US structure is really wobbling right now, I think a lot of people can attest to that. So it could be that Bitcoin becomes the new risk-free asset that the market recognizes. Like Larry Fink said, it's being classified as a flight to quality. And it's very, very interesting that you're making this comparison when you might even secretly see, hey, Bitcoin is catching up here. Of course, there is still a lot of gap here, but we have to be careful that Bitcoin doesn't catch up with us, because if people suddenly all get out of US government bonds and into Bitcoin, then the USA will have a massive problem because then they will no longer be able to maintain their Ponzi. They absolutely need to find buyers for their US Treasury bonds, or else their whole operation is going to blow up. If interest rates get too high, they won't be able to refinance or take on new debt, because the interest will just eat them alive. Then they'll basically be a zombie state, only making interest payments. And now we really need to address the negative aspects, like how Bitcoin is being heavily fought against. It actually says in that section about security risks that the decentralized structure and the lack of checks in public blockchains increase the risk of bugs, exploits, and attacks, as seen in historical cases of vulnerabilities in Bitcoin and Ethereum. As mentioned before, there aren't any historical examples of vulnerabilities in Bitcoin. It might be different for Ethereum, but with Bitcoin, there really aren't any weaknesses because a bug actually means a software error. So bugs are basically things that, for example, you realize, for example, you have the Bitcoin blockchain up and running, and suddenly, 2 years later, you realize, oh, sorry, there aren't actually 21 million, we had a bug here, there are now suddenly 40 million Bitcoin. I mean, something like that has never happened, like a software error, because the cool thing is that it's an open source protocol, which means anyone can take a look at it. Anyone can check to see if there are any bugs in there, and probably millions of people have already gone through the source code looking for any issues. And that's exactly it. The public blockchain allows us to have a software protocol that's as bug-free as possible. They also say that public, permissionless blockchains use complex consensus mechanisms, which makes it hard to efficiently spread large transaction volumes. These blockchains rely on decentralized nodes without central authorities, which leads to vulnerabilities. So they clearly say that because there are no central verification mechanisms, no central nodes or anything like that, since everything runs decentralized, there are potential vulnerabilities. And also because we have this decentralized structure, our scalability is pretty poor. I want to remind you that scalability for Bitcoin happens on the second layer, like with the Lightning Network. The Lightning Network, The Lightning Network can handle a ton of transactions per second or per minute, way more than what's possible on the main layer. That means this is a very insidious argument. They're really twisting facts around and clearly framing it against Bitcoin. You can't say it any other way. They even talk about governance gaps. Public blockchains don't have clear governance structures, which increases the risks of system failures or abuse by bad actors. So, I've never heard of the Bitcoin blockchain being, let's say, corrupted or anything like that. In the fiat system, this happens all the time, money rules get changed and so on. Bitcoin has completely transparent money rules. And now they're also talking about money laundering and compliance issues. Public, permissionless blockchains allow for anonymity, which can facilitate illegal activities like money laundering and evading sanctions. That's absolutely false. Bitcoin is neither anonymous nor does it allow for large-scale money laundering. The argument keeps coming up that Bitcoin isn't anonymous. It's pseudonymous. So, if I can link your address to a person, I can completely expose your entire transaction history. In 2001, more and more people, including criminals, realized that Bitcoin is not a good vehicle for money laundering. It is better to do it in dollars or something like that. And on the other hand, you have all these big banking scandals, all these massive war machines. What's going on there is like huge money, I'd say washing machines or money laundering drums, or however you want to put it. And then they go after the little Bitcoin network, which only has a market cap of about 2 trillion. That's just ridiculous when you look at the big picture, considering the thousands of money laundering operations, the millions, billions, definitely incredible sums of money that have been laundered through such structures in recent years. And then they go after the little Bitcoin network, which only has about 2 trillion in market cap. It's ridiculous when you look at the big picture, considering the thousands of money laundering operations, the millions, billions, definitely incredible sums of money that have been laundered through such structures in recent years. And then you have Bitcoin with a public, decentralized, completely transparent blockchain structure that's even open source. And that's how they attack it, complaining that there are no central servers, no central nodes, or no government that can step in. And Bitcoin has a public, decentralized, completely transparent, let's say, blockchain structure that's even decentralized and open source. And that's how they attack it, complaining that there are no central servers, no central nodes, or no government that can step in, no central actors, unstoppable, unchangeable. Bitcoin's brilliance. No one can stop it, no one can intervene, no one can prevent it, and no one can change the rules. That's what's genius about Bitcoin. And now I'm actually going to show you my waterfall jump. I was actually here in El Salvador at the waterfall. Incredibly cool, all the things you can do here. But before we get to the waterfall, just a quick shout out. If you want to buy Bitcoin, check the link in the video description below. The easiest way to buy Bitcoin in Europe. Really super easy and simple. With the code Bitcoin Hotel, you can still get up to 20% off the fees when buying Bitcoin. And now check this out, my waterfall Bitcoin to the moon jump from El Salvador. And now here's the jump from another hardcore Bitcoin hodler that I also convinced to jump down here. Let me know in the comments which jump you liked better. Super chill, you know it? Let's freaking go.